All right, David, welcome to the show.
I appreciate you having me. This is awesome. This is a great space.
Dude, I've known you a long time, and you always told me that, you have an advisory business, M&A, and then I go on LinkedIn and you're doing all these deals and you got all this stuff cooking. I was like, well, you definitely have to come on the show. We got to talk about it. Give me just sort of a quick origin story. How did you get into advisory, M&A, and then more specifically, really the middle market, which I think is what you target?
Yeah. So probably the interesting beginning is I actually did investment banking and M&A up in Wall Street briefly, and I hated it for a variety of different reasons. Culture I wasn't the biggest fan of, and I didn't think the values were really aligned. Anyways, fast forward, I ended up starting my company almost 15 years ago.
Okay.
And somebody actually asked me to do as a favor because I at that point I was primarily buying businesses and helping other people buy businesses. And they said, hey, could you help one of my family members sell their business? And I said, sure, I'll help. But ultimately what it did was I stumbled into realizing that I actually really enjoy it, right? The fact that the culture in Wall Street, which is a very different practice since I've now realized versus today, is irrelevant, right? I can create my own culture, and we can have a tremendous impact in a lot of people's lives. And ultimately, over the past handful of years, we've done almost 2 billion of transactions in South Florida. So thankfully, it's gone well. But it's a very different task. When you're talking about Wall Street, you're dealing with Fortune 500 companies. Yeah. Everyone has a team of MBAs. Many of them are former investment bankers. So they're really looking very transactionally at the investment bank, and they're looking for a service. And quite frankly, most of the time it's CYA.
Yeah.
When you talk about the middle market, you're talking about business owners who are both economically and emotionally invested in their business. It's probably 80 to 90% of their net worth.
Yeah.
You're also talking about, many people describe it as their baby, right? So they're not necessarily dealing with the decision to sell or the sale process in a completely rational, frame of mind. They're coming at it with a lot of different energy, charged energies.
Yeah.
Which, in a lot of ways makes it a lot more complicated. You think about, I think Einstein said, imagine how much harder physics would be if atoms had emotions, right?
True.
So you're dealing with a lot of people that, this is a once in a lifetime event for them.
Yeah.
And involving their baby. And so, for me, it's been a lot of fun because not only can we do well, but we really have a big impact on these people's lives. Because they don't have that same level of sophistication. Without us, they would be at a totally different outcome. Yeah. So we've had situations where we sell dramatically higher than the offers that they get because they just don't know any better.
They don't know anybody. They've never gone through an M&A process. It's funny because you said literally their baby. In a lot of cases, it's family members, right? So they got family members, second, third generation. They're like, this is our identity. This is what our mother and father built and then passed it on, and now we have to go through this transaction. I don't know what to do. Define the middle market that you go after. How big companies are we talking?
Yeah, I mean, it's a great question. Yeah. If you ask 10 different people, we're probably get 10 different answers. Right. The way we defined it in the book was 10 million to $1 billion.
Okay.
What we're trying to say is it's not the local mom and pop shop.
Yeah.
There's enough infrastructure that there's some layers of management and some structure, but it's not the Fortune 500 public companies.
All this stuff that you read, the greatest transfer of wealth, trillions of dollars, next generation, it's tied up mostly in businesses, correct? Like operating businesses.
A very significant portion. Yeah. You also have real estate and other things, but businesses, absolutely.
Yeah.
And, unlike real estate where, it's a relatively passive activity, a business is a very hands-on activity, right? And so as you get older, life priorities change or whatever. And so, the statistics indicate that about 10 trillion with a T of value is going to be transferred in the next 5 years. So by 2030.
So common mistakes that people make, right? First time, I've operated this business for 30 years. I've never done M&A. You're right. 80% of my net worth. What are common mistakes that you see?
Look, I think first and foremost, the biggest mistake, and in fact, our biggest competitor is people trying to do it themselves. And it kind of is nuts because they've seen people, their $2 or $3 million home, they hire a realtor, and yet for their $80 million business, they want to save a little bit of money.
Yeah, they get an accountant and a guy and let's go.
Yeah, and look, at the end of the day, they're entrepreneurs. Could they sell it themselves? Absolutely.
Right.
The question is, could they do it at the best possible outcome?
Right.
And so you essentially have a situation where every single person on the buy side is professional, right? They're doing it repeatedly. This is not, something that they just dabble in. They, are experts in it. And so it's totally unrealistic to think that while you're an expert in your business, that you're going to be able to go toe to toe with, the Miami Dolphins and,
Yeah,
and
yeah,
you
yeah,
haven't
yeah.
even thrown the ball in the first place,
Right.
right? So, but interestingly, in the middle market, you'll find that over half attempt to sell themselves. And most of the
Really?
time it's because they get, and right now it's very common where people are getting, phone called 2 or 3 times a week asking to sell or asking them to, to sell their business to them.
Yeah.
The reality is most of those people are just, people throwing spaghetti against the wall and,
Yeah.
they don't have any money. But from the business owner's perspective, that they don't have that context, they don't really know who's who. And, ultimately, there comes a day where they're just tired and they want to throw in the towel, and
Yeah.
that call comes, and that's what a lot of people do. But the reality is that there's plenty of studies that show, you get 25% more selling through a formal process with an advisor.
Yeah.
But you also have a much higher likelihood of success.
Yeah.
Perhaps more importantly, peace of mind, because the process is a extremely charged kind of emotional roller coaster.
Correct.
That somebody has to, to
Yeah,
go
and
through.
there's a level of good cop, bad cop. There's also the experience, right? If you're not in the throw of things of always buying and selling companies, you may not know the question to ask. By the way, the other thing is creative financing. So you're like, how do we get over this hump? Well, you can structure the deal X, Y, and Z. If you're not in that world every single day, you're going to miss that, right? And I don't blame people. I mean, it's very common.
100%. And the reality is that there are a number of different tactics that structurally a owner could never do himself. For
Right.
example, you can't go and approach people about selling your business confidentially if you yourself are the one.
Right.
And confidentiality, is typically very important to a lot of these people.
Yeah.
And similarly, if you go buy a car at the dealership, the salesperson negotiates with you and then goes and has to ask his manager. But you ever wonder why the manager never comes out?
Right.
It's because that they basically call it you're leveraging your lack of authority.
Yeah.
And so you have a second crack at the apple. If you yourself were at the negotiating table, you'd be put on the spot and have to make a decision.
Yeah.
So there's a lot of little things that basically are very difficult structurally for somebody to do themselves. And perhaps the most important is you're just emotional, right? So even I've done a number of private equity investments myself.
Yeah.
When I sell, I hire a third party. Why? Because using a poker analogy, there's so many tells that a professional on the other side can read in terms of enthusiasm or eagerness or whatever. And, the reality is relative to a couple percentage points in fee, you're easily, for anybody that's effective, going to make that, and manyfold.
Yeah, and I think the personal part, because all businesses have a little bit of warts, right? And so when you
100%.
start pointing out the warts of, hey, why was this and that, I can see where people take it very personal. All right, so private equity. Are we all going to be owned by private equity one day?
That's a great question. I mean, look, if you look at it from a 50,000-foot view, over the past 30 years, the number of publicly traded companies has been declining.
Declining nonstop,
right?
Yeah.
So, and the reality is, it doesn't make economic and often strategic sense for somebody to be public.
Right.
So, structurally, and that's because the regulations and everything are just making it extremely burdensome. So, private equity for sure has been increasing as a force. The other item is, particularly when interest rates were low, pension funds, endowments, they need to make a return.
Correct.
And private equity is a source of additional returns or higher returns than they would get in the public markets. So there's a lot of pressure to put money to work. And right now there's almost $1 trillion with a T of what's called dry powder. So basically money that's waiting to be invested but has not been. So there definitely are a lot of tailwinds that are going in that direction. At the same time, you have a lot of regulatory overlays that I think present some potential speed bumps. In particular, the Federal Trade Commission, the FTC, has been extremely aggressive against private equity and challenging a lot of the different mergers. And so, it's one of those things that I don't think it's ever going to go anywhere because that capital source is needed.
Yeah.
But it's unclear whether it's something which will continue to proliferate at the same, pace. Because, if you looked at it relative to 10 years ago, we're probably up 3x.
100%. Yeah, because the rates were so low, so the cost of capital was so cheap. So, the question is like, how levered do they get up in some of these huge transactions? That would be a concern for me. But, do the regulatory bodies say, hey, look, it's become uh, so administrative, so expensive to go public. Is there another alternative, right? Like, can we lower that cost? Because you're right, you have trillions of dollars that need to change hands. And if you don't want to sell to a private equity guy, they're like, oh, I got to roll over this or that, or like, it worries you. You got to have, you got to give people another vehicle to get out of that. And it's a water effect, like it's just like a waterfall effect. Like even VCs, like how do they get out of some of these deals if they can't go public,
Yeah.
right? So I'd like to see the people in DC get a little more creative, and even on Wall Street, just how do we get out of that? That not all of us have to sell to a private equity company.
100%. So a couple of things. I mean, there's a lot of different industries of which you can see this. If you look at the valuation multiples before private equity entered and afterwards, dramatically higher. Because if you think about 20, 30 years ago, particularly before, private equity was very, widespread, somebody that owned a pretty sizable size business had very few options of how to exit. And so now, particularly a business of scale, meaning one that has probably at least 4 or 5 million of profit, potentially can sell to 200 or 300 very eager professional buyers, right?
Right.
So it definitely has created a much more efficient marketplace in terms of people selling. At the same time, particularly on the regulatory front, you have some bad apples of, single points of, bad stories that didn't end well.
Yeah.
And that really has struck a chord in terms of the sound bites out there. And so the general sentiment, if you look at the Wall Street Journal or New York Times or pretty much any of the papers, generally it's pretty negative on private equity, right? So, but I think the right way to look at it is more nuanced, right? Just like, there's a wide range of people, there's a wide range of private equity strategies, wide range of their character levels, personalities, et cetera. And what's important is that, you find somebody that's a good fit for you.
Yeah.
Right. So, it really is not necessarily that this person is bad or not. It's around, are you aligned on the things that matter?
Yeah. Look, you and I have a lot of the same friends. They've had exits, and I would say by and large, there's more positive outcomes that have come from their private equity transactions than others. I do have a lot of friends that have had very bad outcomes.
Sure.
One of the common themes, and I think you touched on it a little bit earlier, is that it's really about alignment in relationships. Is the rollover, right? So you're like, oh, great, I'm going to roll over, have another bite of the apple, and that return will be X, Y, Z. But what they come to find out is like the rollover into this company that I have no visibility in, and it might be a hodgepodge of 20 companies, and 10 are really good, and 10 are sucking wind. And then I don't know. And then that's when the fights and the lawsuits and the clawbacks and, this and that or whatever. Like, how do you make sense of just sort of that second bite of the apple and like, what is in that mix of companies a lot of times when private equity is biting you and saying, hey, you need to roll over 20%?
So I think, there's a range of answers, right?
Yeah,
It
yeah,
depends.
it depends.
But, for me, fit is really important, and it really comes down to alignment of expectations.
Correct.
So specifically, using an analogy, if you're to get married with somebody, you probably want to make sure, we're on the same page in terms of, are we going to have kids or not? What religion are we going to practice?
Sure.
Where are we going to live, right? And the same thing, that ultimately, both people can be very well-intentioned, but if you're not having the conversation around, hey, I want the business to go this way, or I want to get as much liquidity out in terms of dividends going forward, and you're not on the same page, that's where you have a lot of potential for misunderstandings.
Yeah.
Right. So, I think a lot of times the error with a lot of the people is they never even ask the question, right? And then they say, well, why didn't it work out? Well, when you sell, even if you sell a majority of the business or the overwhelming majority, there basically is an ongoing financial relationship you have with the buyer, even if you didn't roll over equity, because you may have earnouts, you may have consulting agreements or holdbacks or whatever. I personally believe life is too short to deal with somebody that you don't like and you don't trust, right? So to me, fit is the absolutely most important element.
Yeah.
You choose who you want, who you think is the right fit, and then use a competitive process to get them as high as possible. But the alternative of saying, I'm going to go for the highest price and then say, why did this not work out? And why am I unhappy? You basically set the table, against yourself, right? So, you do have situations where you have private equity companies that will have a portfolio within a strategy and mix you within. And, often there's not a lot of transparency.
Yeah.
But that's one of those things that you need to either demand the transparency or say, I'm not comfortable with it and I don't want to participate.
Right.
And so a lot of it really comes down to asking the right questions, spending the time and quality time with them to make sure that you feel comfortable with them as a person and with their
Yeah.
answers. Look, there's no guaranteed success, right? There's
Of
no
course not.
success in a marriage or anything else, but you at least maximize your chances that it's going to work out well when you spend that time to work through the major issues, up front.
Yeah, yeah, because it's important because when you do those deals, that becomes your largest single investment, right? Like, okay, I cashed all these chips in, but now I got this rollover, which is usually a really big number, and it's tied into all kinds of stuff.
Yeah, and
People
look, and,
understanding that,
and,
yeah,
and mathematically, I mean, there's stories of people making tremendous
making
amounts
more on
on
the
the
second
second
bite.
time.
Yeah,
Yeah.
yeah,
And but in a lot of ways, particularly with a lot of my clients, I always say, look, you're going to be financially independent one way or the other when you
right.
sell. So what's really most important is your life satisfaction afterwards,
Yeah,
right? So
yeah, yeah,
even if you can make triple the amount, you probably should think twice if it's going to make you unhappy for the next, 4 to 7
yeah,
years,
yeah, yeah.
right?
Correct.
And one of the things as well is what's the expectation of you post closing?
Mhm.
Their expectation is I'm going to go off to the Bahamas and I'm done.
Yeah,
But does the buyer have the same mindset, right?
right.
So these are the type of things of speaking about it up front, and then during the process of having an open line of communication. And one of the things I highly recommend is when you have a potential partner is going through the exercise of almost doing a background check,
Mhm.
calling and getting references and saying, well, how do they
Yeah,
operate when things went tough, went bad?
yeah,
Because, the reality is I guarantee you something is not going to go as planned.
correct.
And so I'm an attorney, but I personally believe that a good partner is much better than a good contract.
I agree with you 100%. Recently happened to me, buddy of mine, back firm, is going to buy them. I went on the website and I said, hey, they actually bought a company of another guy that I know.
Yeah.
Let's set up a call. And we set up a call, and it was a really good fact-finding mission. Some good, some bad. But for
Sure.
my friend, at least he walks into the deal eyes wide open. And it's amazing to me how many people don't do that exercise. And you're like, man, I potentially saved my friend a lot of headaches and money, or how to structure his deal
Yeah.
based on this call that I set up with another friend that was 30 minutes. And it cleared the air for a lot of things that he was concerned about. Let me ask you.
And that's, ultimately, when people try to do it themselves, they think it's all about just finding a buyer.
No,
It's
man,
about
at
finding
all.
the right
The
buyer,
right buyer.
right? And so ultimately, it's not just helpful with that, but
Yeah.
guess what? I've done the same thing to understand what their negotiating strategy is going to be like.
Yeah.
And how to basically, frame something in the most, advantageous way possible. So those are the type of things that if you take the time to intentionally do it,
Yeah.
you can have a much better, outcome.
Yeah, absolutely.
Unsurprisingly.
I'm sorry, you do your own investing, correct?
I have done
You
different
have
private
done?
equity investments.
What right now, what are you looking at? What do you like?
So, right now, our focus is primarily stuff which is very Miami heavy.
Okay.
Quite frankly, there's a personal element to it, which
Yeah.
is I don't want to be on a plane all the time.
No, they totally make you go
And
back to what you said about your lifestyle and what's important. Yeah.
and I think there's a lot of very interesting opportunities out there, right?
Uh-huh.
So whether it's, what do I mean by Miami heavy? I think things like seawall construction, concrete restoration, things of which, with sea level rise or whatever, you're
Yeah.
just going to continue to have more and more, going forward is a very interesting, kind of pockets of opportunity. But at the same time, for me, investing is very relationship oriented.
Yeah.
And so rather than saying, okay, I want the most ideal, this type of industry, it's, do I trust this person? Do I think
Right.
this person is going to be able to, no matter what they touch, always be successful?
Yeah.
That's the type that, in a lot of ways is most, of most interest.
The search funds or the ETA guys, right? Entrepreneur through acquisition. Are you seeing more and more of these?
I mean, there definitely is a proliferation
Yeah.
of people wanting to do it, right?
Right.
In terms of the numbers that are actually successful, I'm not 100% certain, how much that actually is translating to, to an acquisition. The reality is that it's a tough process to both find a
Correct.
business and then
Correct.
operate it. Two different skill sets.
100%. Yeah.
And at the same time, being able to find the capital to be able to do it.
Right.
So some people have access to it. The statistics that I've seen say about 50% will go through the 2-year process and find a business, and the
Yeah.
other 50% never find a business.
Correct.
Right. And end up having to get, a normal job.
Mhm.
But, I do think that conceptually there is an opportunity, which is there's a lot of baby boomers that need to retire.
Yeah.
they're not getting any younger, and so somebody that can help provide a solution for them is a great, is a great outcome. Uh, Unfortunately, the market in the private, company world is just very inefficient.
Yeah.
So being able to match up buyers and sellers is hard because most sellers are highly concerned about confidentiality.
Right.
The fact that they're even thinking about selling could make
Yeah.
their employees nervous, could
Yeah,
make,
yeah, yeah.
their customers, think twice. And so they're unfortunately, unlike in the venture world where you can say, let me look a list of all the different companies that are growing and probably want to take capital.
Yeah.
It's much, much harder, to identify
Yeah,
them
because
in
the real
the
small
middle market.
guys, private equity is not going to get involved with. And then, so the second layer of that are the search guys. The problem is that very, very small company, let's call it a $2-3 million top line company.
Hmm.
The owner is the operator. He's also the sales guy. He also knows where all the bodies are buried. He really knows how to run that business.
Sure.
The minute that person leaves, you worry about where the business goes.
100%.
But it's also a great opportunity of like, hey, look, man, I don't know how to create the next widget in venture capital world and the next app, but I do know blocking and tackling about business, how to manage people and how to put
Yeah.
together budgets and stuff like that. It's a good option for someone if you can structure deals right. But I think
100%.
you're right. The gap right now is that matchup, right? You can go to a business broker, you don't know who the hell this person is, loosely regulated industry, or you can go to one of the 101 websites that, who knows what you're going to find there.
Yeah, I mean, look, it's one of those things that it's not sexy,
Yeah.
but owning over the long term a small business, particularly if you're a good operator, is a basically guaranteed path to wealth.
100%.
Now, what is the level of wealth?
Yeah.
We can debate,
Right.
right? But, if you look at it relative to a lot of other traditional jobs,
Yeah.
a lot of people that tend to go to search funds are entrepreneurs by nature.
Yeah.
They probably were not the best fit in a corporate environment anyways.
Yeah.
And so, to me, it's not just a win from a financial standpoint, but, why do people become entrepreneurs? A lot of times it's around freedom.
Yeah.
Sometimes it's around lifestyle. Sometimes it's that ability to speak your mind,
Yeah, man.
whatever it is.
Yeah.
And so, it is the right fit for, a lot of people that has a tremendously lower amount of risk than just starting something, from scratch.
Correct. And those businesses have already done the real heavy lifting. What I mean by that is that they develop a product or service that people are willing to buy. They have contracts in place. They have a reputation, a brand, whatever. Like that's the real hard part. Getting a business from the ground to $1 million in revenue is like much harder than, getting it from 2 to 7 million, right? Like those steps are huge leaps. If you did that and then you come in and you go, hey, look, I can bring a level of sophistication. I understand technology better. I actually have a different portfolio of relationships that I can bring to the table. You could build a really kick-ass business out of it.
Yeah, 100%. I think one of the challenges is that founder new owner relationship
Yes.
that can get very, tricky because it is the baby, right?
Yeah.
And ultimately, if you continue to do the same things you did in the past, you're probably going to get the same results, right? But, interestingly, I've seen situations where, kind of more finance guys do the search fund route and end up, I just spoke to a guy that every employee walked out and he literally, spent a lot of money for the business and had to figure it out. At the same time, there's some people that are excellent operators
Right.
and say, look, actually, I don't want the owner, coming in anymore because
Yeah.
I know how to run this business. I've been in this industry for a long time and I want to take it in a new direction. So, it really comes down to that confidence level and capabilities in the ability to really manage and lead people.
Yeah.
Because at the end of the day, what is a business without, people to actually do the work?
100%. Yeah, you hit on the head. It's all relationships, right? Everything in business, any book, any spreadsheet, that throw it out the window. It's relationships and understanding and making sure that you're aligned and the lines of communication are strong and that you're going down the same path and that when you have problems, you can bring it up and talk about it and go from there. If not, all the rest is just jargon. It really is.
100%.
How are you seeing the current market, the M&A market, and what do you think heading into 2025 is going to look like?
So, I mean, if you look at the numbers, just in context, the M&A market trades within a band in terms of number of deals.
Yeah.
But 21 went through the roof. It
Yeah,
was almost
yeah,
double,
yeah,
right? And in some ways, I guess it made up for 2020.
Right.
But it was also fueled by the fact that you had very low interest rates. And so just deal making was plentiful. Cash was easy and cheap. You've seen over the past 2 years, 22 and 23, each year going down from the prior year. And so this year looks like it's stabilized if you look at it on apples to apples basis, it's up about 10% from last year, which is
Yeah.
a good sign. I personally think 25 will be a pretty big year for a couple reasons. One, there's been a lot of people kind of waiting to see with the election.
Yeah.
But secondly is, aside from the volume of deals, you had valuations go down significantly
Yeah.
relative to 21. And I don't believe those valuations are going to come back anytime soon.
No, I don't think so.
But, now we're in our third year and business owners are more in a position to kind of accept reality of, look, this is the new normal. And quite
Right.
frankly, what was always the case before, it
Yeah,
just
yeah,
was this one little momentary,
Right.
period of time. Similarly, the same is occurring with private equity funds.
Right.
So you're seeing the hold periods for the portfolio companies the longest that they've ever been.
Right.
And it's because they're trying to wait out the market and hopefully things go back up.
Yeah.
But at a certain point, their investors expect the money to be returned
Yeah.
back. And actually structurally in their contractual, agreements and their documents, they have to, at a certain point, return the money. So I expect next year, you're going to start seeing a lot more of these private equity investments that basically have been on the sidelines for the past 3 years
Mhm.
because they have to. At the same time, I think it's probably going to become a buyer's market because when you're having that many businesses go on the market at the same time, you have the demographic factors in terms of the baby boomers retiring.
Yeah.
I think we're going to have many more businesses for sale next year than we definitely have today.
And buyer's market, I mean, so some of these private equity, they overpaid for some of these deals. And in the VC world, same thing. So they're going to have to
100%.
mark down some of these investments and just like unload them.
Yeah, and I mean, if you tell me what year you bought something, I can kind of tell you how much you paid, or if
right.
it's going to be a good investment or not. That's the
Correct.
strongest correlation in private equity of what was a strong, performing
Yeah.
investment. And so, what happened was in 21 and 22, they were able to pay a high multiple because they were able to take on a lot of debt,
Yeah.
and interest rates were zero.
Right.
And so, just like when you buy a house and you have a very low interest, rate, your payments are very affordable.
Yeah.
But all of a sudden you've doubled the interest rate and it's not so affordable anymore. Right. And so, the other challenge is when you put so much debt, my personal experience having, run and own businesses is that it's much more common to be surprised to the downside than the upside.
Right.
Oh my God, I just made an extra $1 million
Yeah.
is much less common than, we have an issue.
We have an issue, right?
And ultimately those generally cost money and time. And so they also back themselves against a wall in terms of having so much debt that if everything didn't go perfectly, you're going to be in a really, really, vulnerable position.
Has AI depressed prices in certain industries for you? Are you seeing that?
It's an interesting question. I don't think it's had a meaningful impact yet.
Yeah.
What you have seen, and this has been for the past 10 years, is people have tried to market or frame their business as, okay, I'm a technology-enabled, WeWork, real estate company, or a technology-enabled janitorial services business, whatever it is. And so that, I think there's a lot more skepticism of, okay, am I really going to overpay for that? What exactly am I buying? And how is that going to translate directly into a higher return? Because, we can talk about multiples and how much something costs, but at the end of the day, private equity is in the business of returning profitably and making a financial return on that investment. And so there's, the more you pay, the less return you're going to get with the exit. And that's, I guess one of the headwinds, if you will, with private equity, in that unless there's a major correction in terms of pricing, it's very difficult for them to get the targeted returns that they want, which is around 25%.
Yeah.
And at the same time, pay the multiples that currently are going on, the market.
Yeah, but it's crazy to me. You got quote unquote all these smart people in the world, and they don't see through. So like, we'll use the WeWork example. Is like they were valuing that thing as a tech company. I'm like, it's not a tech company. It's a real estate like office. Like that's not worth whatever their final number got to, $50, $100 billion. It's probably worth a couple $1 billion. I don't know, but like
it's a good business.
It's a good business,
crazy.
But it's not right. It's not a Google. And it's just amazing to me, and I've seen it in our industry where they do the exact same thing as us, but they'll put a little spin on it that it's this tech AI, whatever.
Yeah.
And it'll go public or it gets sold for. And I'm like, do these guys realize that it's the exact same business that I have, but they just market it a little differently? And happens every time. And then 2 years later, they're kicking themselves. And what did we buy? And they're all upset. It's fascinating to me that people still fall for this stuff.
Yeah, I mean, that said, and actually with some of these businesses that are tech enabled,
Yeah, yeah.
when I ask them about the tech and I get, Excel spreadsheets, right?
Yeah,
So it
right.
is tech,
It is
right?
tech, yeah.
I mean, the reality is AI is going to be impacting almost every business
Every
in
business.
some capacity, right?
Yeah.
And I think it's more of an enabler, right?
Yeah.
So in a lot of industries, if you don't have it, you're probably not going to be able to deliver the same efficiency
Yeah.
that you would otherwise. And so I do think that at a certain point, I don't know when that is, if it's 5 years or 10 years in the future, if you don't have that, you're going to be looked at as a kind of a dinosaur that should
Correct.
be commanding a much lower,
Yeah.
multiple.
Yeah, I agree with you. I think it's going to be a great tool. It's more efficient. It's just like when, when computers were introduced to the workplace and stuff like that. Like it's just going to be a pivot of different things. But I don't think this craziness of like mass unemployment and stuff. People are just going to be directed into a different area. We use it in our business, and our industry is an industry that everyone keeps hammering. I'm like, I have my theories of what happens with our business, but it's made us very efficient. It's
Sure.
made our agent experience and the end customer experience even better. So that agent just has more tools
Yeah, of
to
course.
service that client. And then on the back end of our business, I don't know about you and your companies, the amount of time it has like saved us, and it's just made us better. And I use it every single day for different tools that I use, and it's just made me better, man. Like
Yeah.
but I'm still busy. I still got all the same stuff, but I can focus on some different things. You wrote a book. Tell me
I
about the
did.
book. Why'd you write the book?
I was crazy. I had a momentary lapse of judgment, and no people had encouraged me to write a book over the years, and they put me in touch with the publisher, and basically the publisher said, "You either deliver it in 12 months, or we'll find somebody else." So I said, "You know
Okay.
what? I'll put my head down and get it done."
Wow.
Unfortunately, it was a pretty kind of tough period. My
Yeah.
first daughter was born 3 months before, and
You're
so
insane.
everything that is best practices, if you will, in
Yeah.
writing a book, I didn't follow any of those. But it's one of those things that probably one of the hardest challenges I did
Right.
professionally, but something which I'm really proud of, and glad to be on the backside. I think one and done though. I don't think
You're
I'm
one of
writing
the.
any
So
other
tell me,
books.
if I buy this book, what's in it? Why should I read this book?
So the way I like to describe it is, before you have a baby,
Yeah.
you go through birthing class,
Yeah,
right? It
sure.
doesn't make the process any easier. It's still going to be a tough
Yeah.
process, but at least you're not blindsided. You
Yeah.
know what to expect.
Yeah.
And so the same thing, too many business owners and clients, I find, just have no clue what is going to happen.
Yeah.
They have no clue what likely is going to happen to them from a psychological standpoint, what they're going to go through. And so being able to shine light will help them become a much more educated partner through the process.
So it's literally step by step things that you should plan for, understand, almost like a how-to kind of book, walking you through.
Yeah, and it's
heavy
plain
middle
English.
market focus.
Correct.
Yeah,
So
got it.
it's plain English. You don't need to have a finance degree, even a degree, to be able to read it.
Yeah.
Right. The reality is this is not rocket science, but I also didn't want to dumb it down. I wanted to really explain the range of options in very accessible language so that people can confidently make decisions, because a lot of these things, they don't even know the right question to ask.
Correct.
Right. And so being able to peel back that onion and say, hey, look, these are things which you probably should think about or ask are, really important. So throughout, we have a ton of, checklists, questions that you should think about and ask,
Yeah.
questions you should ask yourself and reflect upon,
Yeah.
that all help prepare you through, each stage of the process.
Very cool. All right, I got a game. You ready? It's called buy or sell.
Okay.
I give you a word, a topic, whatever, you say buy or sell. Ready?
Okay.
First one, AI.
So
You're selling AI. Why are you selling AI?
I think it's overhyped. I think there's a lot of potential, just like WeWork, but ultimately there will be a couple winners, and there's going to be a lot that
a lot of dead bodies along the way. I'm kind of with you on this, but all right, Elon Musk.
Buy. The guy's just incredible. I mean,
The guy's incredible.
whatever across industries so varied, he's been able to just an incredible visionary, right? Say what you want about his politics and his personal life and all of that, but as an entrepreneur, pretty hard to bet against him.
It's hard to bet against him. Hard to debate the results. The guy's a magnificent, operator. I don't know when he sleeps, but he's pretty wild.
Yeah, I
All
think
right.
he's CEO of 5 companies, and if depending on how the election goes, he may also take a government role in addition to the 5.
Which
I
I'm
don't know how
okay
that's
with,
gonna
by
work.
the way. He'll definitely get that place running pretty efficiently.
I'm sure there'll be a culture shock. Yeah.
There'll be a culture shock. All right, the city of Miami.
The city of Miami. Buy. I think ultimately There's been such a transformation of the city. Um, and when you talk to a lot of these people that have moved here,
Yeah.
it doesn't seem like they're getting, cold feet and
No.
thinking about moving back. So I think this is a train that, has a lot of momentum.
Yeah.
The only question is, what happens with the first major hurricane?
Correct. Yeah, we haven't had, knock on wood, in a while.
Stay for the next 5 years, I think they're here.
They're for good. Yeah.
If we have a major hurricane, we may lose, some of
Yeah, I'm buying. I think that our best days are ahead of us. I think, unfortunate, but or fortunate for us, COVID was a good thing to happen to us. And I think some of the wackiness that's happened in other states, lots of good people have moved here. I think you go to your world, owner and operators of businesses, not retirees, people who go, I want to make Miami my home, raise my kids here, and make it a better place. We know a lot of the same people, a lot of people who have 20, 30, 50, $100 million companies, along with the big hedge fund guys. I think if we can get our schools in line, affordable housing, get some infrastructure going, the next 25 years of Miami are going to be really, really special. So
yeah, well, I mean, we definitely were born in the right place.
We were born in the right place. All right. M&A in 2025, you buying or selling?
I will primarily be a seller.
Okay.
In terms of advising people, through the exit process. There may be some, specific opportunities where I'm a buyer. But ultimately, strategically, my focus has been predominantly on, really trying to be deep within the South Florida market.
Mm-hmm.
And there's so many more opportunities to help them sell than there are, buy opportunities where it's a business that I really love and a team that, we really gel well.
Yeah.
It comes, but it's not every day.
Not every day. Soccer in the United States, you buying or selling?
I'm buying. I never, really played
Me
soccer
neither.
growing up, but ultimately, particularly you look at what's going on with Messi and Inter Miami. I mean, it's something of which, from all cultures, all nationalities, there seems to be a lot of affinity for it. And if you look at the rest of the world, they clearly, are much more into soccer. So, I can't see it.
Yeah, the sky's the limit here. I'm with you. I didn't grow up playing, but
and you look at other sports that typically would be, with kids. I played a lot of baseball.
Yeah,
and viewership and everything else is down. Versus,
they don't play as much.
A lot of kids are doing soccer in the younger ages.
All right, NFTs.
I'm selling. I never had one.
I never had one. I never bought into it. I still don't understand it. I don't understand it from an investment standpoint. It's a lot of nonsense. I've always thought it was nonsense.
Yeah, I mean, first, if I don't understand something, I'm not buying it. And I still, people explain to me 2 or 3 times, and I'm like, man, I don't get it. I don't get it. Capable of it, I guess.
I don't get it. All right, Bitcoin.
I'm also selling.
I still don't get it either.
Yeah, it's one of those things that maybe I'm proven wrong, but from the vantage point of storage of wealth and safety and all that, like, to me it seems like something that, if you want to think about it like gambling, it's betting on a game or going to the casino, fine. There's just something about it that doesn't feel like an investment asset class for me.
It feels, well, now it's hedging, but it was always supposed to be a hedge against inflation. For a long time, it wasn't, and it's one of those investments that, like, if I missed it, I missed it. I'm comfortable with it. Okay, the Miami Dolphins.
Miami Dolphins. I'm buying.
You're buying. You're one of the few that are buying. Why are you buying the Miami Dolphins?
Because there's only up to go from here. I mean, not that they've done bad this season, but at the end of the day, there's most likely going to be a new ownership, right? Yeah. And we're an iconic city, and they've got to figure it out. So is it going to be 5 years or 10 years or whatever?
All right.
My entire life, it was, next year.
You're very patient.
And so, it's one of those things that, relative to, if let's say we're New England or whatnot, where the expectations are here, I feel like, relatively low expectations, and we've got all the right criteria to
make it happen.
Yeah. To make it
all
happen.
Right. Buying or selling the country of Cuba?
I mean, I guess it's a buy in that change has to occur, right? The question is,
look at the gray hair I have on my head.
Yeah, but I mean, I think that, and I guess people have been saying this for the past 40 or 50 years, that from a sustainability standpoint,
You
then
would think,
continue
right?
along.
It's crazy.
They're running out of fuel.
They
just
literally
having,
don't have a power grid.
blackouts.
Yeah.
Yeah. And you don't have that cultish personality of,
Yeah.
the prior, dictator. So I think it's a matter of time. Obviously I'd prefer sooner than later, but I think it's one of those things that at a certain point,
Yeah.
there's just too much opportunity in terms of other countries trading with it and all of that, that I would think that at a certain point it's, it improves. And
Hopefully
hope.
in our generation, right? Hopefully
Yeah.
in our lifetime. All right. Work from home.
I'm selling work from home, particularly as an employer. I think the performance, at least us, our goal is we want to win championships.
Yes.
You're not going to win championships from home.
I agree.
Not saying you can't do good work, but
Yeah.
if you want to play at that level.
Yeah.
But you're also seeing bellwethers like Amazon and other people calling people back to the office who are more tech oriented.
Correct.
And ultimately, them being willing to stick their neck out there, I think is basically going to give permission to a lot of other companies. The reality is that it's all about the balance of power. And if every company demanded to work from the office,
Yeah.
we would all go back to the office like we were before. At the same time, I think it allowed us to understand that flexibility is possible.
Yeah.
And I don't think that those two are inconsistent. I think
Yeah.
you can still be flexible with your team and allow them to do different
Yeah.
things. But there's really no replacement, in my opinion, of being physically together, brainstorming, and just making sure on the same page. We had an experience, just recently of something that would take 2 seconds of us all getting together in the table
Yeah.
of who's doing what and what exactly are we doing. Is 4 or 5 calls over 2 weeks.
Yeah. I completely agree with you. We have people here in the office. Giving them some flexibility, I think, is totally important. But there is something to water cooler talk and getting to know people, and you're more patient with folks that you really get to know, and you're not going to get that on Zoom.
Yeah.
And I just think high performance teams need to be together. Okay, one last one. Ready? Buying or selling America?
You got to buy America. Look, I mean, is America on a relative basis always going to be the most dominant country? Probably not. Empires don't last forever, right? But if you think about the fundamentals relative to other countries, particularly other mature countries like Europe and all that, the U.S. has been the most resilient, the most innovative, and everything by far. Do we have our challenges? For sure. But that doesn't mean that, relative to the other alternatives, it's still not the best, route. And it's hard for me not to buy it when both, Warren Buffett is kind of really strong by America, but as well, our kids.
Yeah.
Right. And it's one of those things that it's hard to not kind of fully be bought into the fact that, not that things won't be different, they will be, but there'll be a bright future.
Yeah, it's still the most innovative. It's got great schools, the most transparent. We do have a set of rules and laws that we follow, and although we're not perfect and we're drowning in debt and we got 101 political issues, I will put us up against anybody any day of the week.
Yeah.
So,
and I mean, look, you will have a lot of challenges over the near and midterm, right?
Yeah.
Whether it's debt, whether it's social tensions or whatever those things, but the question is, are you betting on a specific point in time or the system, right? And the system, a lot of ways is self-correcting and has a lot of things of checks and balances that basically allow it to thrive through a lot of turbulent periods. I mean, you think about Civil War or whatever.
We've had worse times. That's what people don't get.
A lot worse.
Yeah. And I think that people have to put some context around, where we're at as a country. And then, just for this topic, or even our business community. And I think we're going to be in good shape. Where can people find out about you and the book?
So LinkedIn's probably the best place.
Yeah. You're very active. Kudos to you.
I've been trying to just, testing it out, seeing how it
you're
works.
Good.
And, they can connect with me there, and happy to connect and answer any questions anybody might have.
Good stuff. Thanks for coming on the show.
No, thank you.